Hello and welcome to our weekly look ahead at the markets. And well, first up, we want to just recap what's been going on in the markets over the last week. We saw yields pop higher throughout the last week, and that's been driving a sell-off in tech names that's been spiraling into a broader sort of problem for the market. We saw the Nasdaq come off quite sharply at one point, down around 11% from the recent all-time high. Tesla shares knocked back 30% from their all-time highs, and that's indeed correlates to when they announced their $1.5 billion investment in Bitcoin. So some concern there perhaps. We've also seen the likes of the ARK-K ETF come off a lot as well. That's wrapped up with a lot of these sort of tech names. So really what we've been seeing is the fact that yields are pushing higher, bonds are being sold off, partly because people think inflation is coming. The break-even inflation is in the US up to 2.5% from the 5-year outlook, and also because I think economic growth is coming back. So twin factors there, related of course, but that's pushing up rates, and that's weighing on tech stocks and tech valuations, because the more rates go up, the more that eats into the future earnings of these growth companies and gives more value to companies that create and generate profits today rather than tomorrow. So that non-farm payrolls number on Friday was a big one, coming in just short of 400,000, well above expectations. That has clearly boosted overall sentiment in terms of the economic health of the US and the global economic recovery as well. Some concerns are that, of course, the stronger the number, the more yields go up and more that eats into tech valuations. I think what it does do is it just signal that this rotation out of sort of tech and growth names into more value and cyclical parts of the market is likely to continue. We're likely to see more volatility as a result of that. We saw the dollar bounce back very strongly last week, cable trading sub 138 at one point, and the dollar index pushing up handsomely as well as the euro retreated. And we saw the dollar yen pair up at 108.50, above that level, its highest in well, since June 2020. We've seen gold testing lows at the 61.8% retracement level, and really a lot of movement happening in the markets over the last few days, and all hinging really on Jay Powell's comments to the market on last Thursday, in which he didn't push back on the recent increase in yields, and that was the sort of trigger for the market on Thursday to sell off as participants expect that really the Fed is not that bothered about this rise in inflation, and nor the rise in bond yields. It's worth noting that the fact that Tesla shares are down 30% should not bother Jay Powell. Indeed, it's not in his remit, not his mandate. He's focused on unemployment, and unlike the sort of progress that we saw following the last crisis, when it was very much inextricably about markets and about banking and about the financial sector, this is different this time. And as long as economic growth is coming back, yields up, inflation up, all because economic growth is coming back, then the Fed doesn't actually need to worry about the markets like it used to. So it's probably a good sign that the Fed is not so encumbered by what happens to the S&P 500 on a daily basis than it did say before the pandemic. So coming up this week, we've got more on bond yields to look out for with the ECB meeting. The ECB policymakers have been signalling that they're not very happy with the yields pushing higher. However, there has been some pretty mixed signals from them. Board member Panetta explicitly pushed back against yields, but then there are subsequent reports of sources saying that they're not that bothered. Anyway, a bit of a mixed picture, so we'll wait to see what Christine Lagarde has to say about this and whether the ECB is going to be trying to do anything about it. The euro, of course, has come off its recent highs, but I still think that probably the dollar should be resuming a downtrend in the medium term. We've also got the Bank of Canada to look out for, and US CPI numbers. They'll be the key thing. Is this inflation that the market is betting on, is that actually coming through? So that's it for the week ahead. We'll have more here for you on X-Ray throughout the week.